The 3rd of July 2023. Pinch and a punch. Pinch, punch. First day of the month. Well, first trading day of the month. For me, anyway. Let's hope it's a bloody good one. I could do with some money in the bank. Had a loser last week. Got one in drawdown at the moment. And a small winner last week on silver. That's all I can report. Well, let's hope it's a little bit better this week. Righto. Hi, Philip. Happy Monday to you too, Paul P. I hope you have a cracker week, mate. Let's get stuck in, shall we, and talk about gold first up. As always, see if we've got something to trade here on the gold 1 hour chart, suggesting that we've got a range from here to here. And if that were to close up here a little bit, I'd be quite happy to trade that. Decent reward to risk to both DS1 and DR1, so why not? Can't think of a reason. I'll set up the buy order first. Actually, I'm on the wrong account, aren't I? I'm going to trade this on the gold trading account, which is so we can track it, right? Rather than sort out the rest of my other stuff on this ATW account, which is for education purposes. Righto, that's the right one now. Let's go with the high at 1920.57. We'll call that 1920.59, shall we? Let's go a little bit above. That's not what I want. That's not what I want. That's what I want. 1920.59. That'll be the entry for the long. Stop loss for the long will be the entry for the short, which will be 1913.41. 1913.41. Take profit will be, should we risk going through DS1 and look for the low? That'd be greedy. Don't want to do that. We'll call it 1905.17. 1905.17. There we go. So 1920.59, 1930.41. We'll wait till that candle closes before we do it. Philip, you are doing something daring today. Short CAD yen. Yeah, that is daring, isn't it? A commodity / risk off currency versus a commodity / risk on currency versus a very much risk off currency. Not sure what the market sentiment is just now, but we'll have a look at that. That could dictate terms. Gold, euro, long. Oh, interesting. Long oil, short Aussie versus the dollar. Okay, we might have a look at those a little bit. What time have we got? It's not moving at all. We're going backwards in time. That'd be nice. At about 50 years a minute for me would be good. Not going to happen, right? Short. I've got to remember those numbers. 1920.59, 1913.41. 1913.41 will be the entry for the short. All right, we have got 39 seconds to go. I like the position. I like where this is getting in the middle, like it in the middle of the range. It's good. Head yen, eh? Short. Ooh. Actually, the yen pairs are overbought, right? So I'm not disagreeing with you. Just getting that timing right, isn't it? Righto, 9, 8, 7, 6. I think we can place the long. 13.41, 20.59. Oh, didn't like that. Buy stop. 1920.59. 1930, 40, 41. What's wrong with that? 1905. That take profit's wrong. Okay. That's what we need. DR1, 1927.29. 1927.29. There we go. That should be better. 1341 and 2059. Short. Sell stop. $13.41, if I recall. And stop loss 19.20.59, was it? Something like that. And take profit on this one, which is the one we had in. $19.05 something or other. 27, that'll do. 1905.27. There we go. Happy days. That's on DS1. That's on DR1. We're good to go. Righto. What have I got happening? I did say I'm in drawdown on Euro Swissy, and we need that to do a little bit of work. We have got an order on silver today, or I have got an order on silver today. What am I playing here? Let's get rid of that to start with. Weekly. Yes. Trading the weekly chart, and I'm trading this bar here. So I've got that line's in the wrong place. Let's actually get rid of it. That's the gold thing, isn't it? So I'm short silver if it gets to 22.268. I have a stop loss at 23.127. And I've got a big target down here at 1883. Why am I being so bold? Well, at the end of the day, I see that as the next support level, frankly. And if we do get this going south, then I'll make a decision as to how fast it's going south when we get a close as we approach this trend line or trade line, whatever you want to call it. It's both really. So leaving the target as is at the moment, it's about a 4-to-1 trade, if I recall. If you want to follow that, they're the levels. Euro Swissy in drawdown. We've spoken about that. That's all I've got left. Pound CAD, we had a loser on last week, as I said. Silver, we had a small winner last week because we weren't prepared to not trail our stop. Where do I get into that? Here. So we traded this bar. And actually, I didn't trade that bar. I traded it on the run, didn't I? I missed that entry. Then I picked it up here on this bar. That's right. I've got a TP1 by the skin of my teeth. Trailed my stop to entry, which has been taken out. So just a small winner. Hey, Lewis, how you doing, mate? New quarter, we have to be daring. Leanne, sorry, can't take your call. So that's silver. That's where I'm up to. Gold, I think, apart from the hourly breakout trade that we're looking for, I think short's still the sport for me. Yet I can't get in at that level. Maybe a 4-hour chart makes it easier. Pivots. You'd probably expect to bounce off the pivots. Maybe I'm not ready to go short yet. Gold. Maybe we need a false break of this level. We'll see. Watch list. I've got 4 on the watch list. Kiwi Yen's 1. Why? Well, along with your thesis, Philip, I think we are at a level or close to a level where this really has got no choice but to retrace, at the very least, perhaps reverse. And I'm coming from the monthly chart down. Monthly chart's giving me that very strong trend line. I've got a channel going up, which is under threat at the moment. So really all I need to see is this horizontal level, the trend line, the channel, all coincide at that point and give me a strong signal that this can go short. Whether that's going to happen or not, I have no control over, sadly. But that's what I'm looking for. So price a little bit more, I suppose, up to around about 89.50, that area there, and then give me something off that level. That would be cool. That's Kiwi yen, definitely on the watch list. Kiwi dollar, tried to trade this long last week, the week before, can't remember, but it didn't trigger from memory. You could argue that there's a nice little morning star sitting there, but where? Bottom of a run? Is it at the bottom of anything else? No, it's not for mine, although there is a form of support level straight through here that perhaps that's bouncing off. What I do see, however, is this confluence area here, this very strong confluence area here, and nice horizontal level through there as well. Breaks above, retests, I'm in, trading it to the top of the range, which of course is the descending channel. What happens thereafter is probably anybody's guess at this point, though there does appear to be a more than a hint of an inverted head and shoulders there that hasn't yet played out, or hasn't played out full stop, I suppose, and has it been violated is the question. Maybe we go into another phase. But short to medium term, I'm looking for Kiwi versus the dollar to get here. Why would I be suddenly saying the dollar is not going to where I anticipated it might? And of course, on this chart, that's in this vicinity, around about 104 mark before it hits that trend line. Moreover, this horizontal level up here somewhere around about the 105.5 mark. It's going to take a long time if it's to play to that confluence area, I must say. Maybe we are in for that. But I do see a little bit more upside for the dollar index, which means Kiwi dollar may not be going long at all. So it's not that clear cut, but I'm just waiting for that break, retest at the confluence to go long. So yeah, I'm not jumping in right now. Aussie Swiss also on my watch list. Why? Well, it's all to do with, dare I say it, returning to trend, not a trend trader by any stretch, but you have to have big kahunas really to trade this right now on that bar because of the level that we are at, which is very, very significant. This is an all-time low, right? And we are bang on that level where this big surge in 2019 ended, really, the big surge to the downside. So you would expect that this is not a selling position, but rather a buying position. Well, they've tried that a couple of times already and failed. The latest failure being what looks to me a clear false break of the 60.27 handle, that red line you can see through there. How significant that is probably debatable, but certainly recency would tell you that support and resistance and strong resistance has been broken, rebroken and retested. So I'm thinking downside, and I do have slingshot candle pattern sitting here. We've got, pardon me, low test bar. We've got something I call a cat sitting there. It's not meowing, no. And we've got low test bar sitting there as well. So that's called a T for 3 in my book. It is my book. I haven't written it yet, but one day there'll be a T for 3 sitting in Jeff's trading journal. I actually don't think so. I do not think so. You could talk me into that. But anyway, that's what I see. And I see if price does come below that level, it will probably challenge the low if it doesn't break it. Daily chart's giving me beautiful, beautiful separation from this trade line. And every time it comes here, it does a lovely little bounce. It's either going to bounce here again, which it has already, of course, or it's going to have a crack at breaking that level And again, I've got a cat sitting on the support trade line. I've got a +1 sitting there, got a low test bar there, low test bar there. It's just screaming at me that if price does get into sell mode, it will test that low. Hate trading from there. And that's why I'd love to see this rally up to into this area here, and then give me a reversal pattern, perhaps on an H4, maybe on a daily at some stage. That's why I've put this trade line in place, and I'd love to see this give me a false break above the pivots, above the trade line where it's already broken, then come back underneath and retest the confluence of all three of those things. If that were the case, then I can trade it to the line and take profit. So I'm not taking any risk that that will break through that line. Well, sorry, I'm not taking much risk that that will break through that line. In fact, I'd get safe if we got to that low. So that's Aussie Swiss. Last one on the watch list is pound versus the Aussie. Now, a lot of these are contradictory. I see a potential here for this to go short. The horizontal level, good Lord, what is that? That's what that is. Okay, so providing with confluence already, I've got a trade line, you can call it a trend line if you want it as well, that is providing horizontal confluence at this level. So I see that as a sell zone. Maybe this can turn into an inverted head and shoulders with a sell down to this area here. So that makes sense to me. Just getting an entry lined up is the hard bit. Already we had a game changer bar there a month or so ago, which didn't drive price down very far. Instead, it's come back and retesting this area now. Love to see a false break in that vicinity. And I've got 3 amigos sitting here as well, suggesting to me that price will break this level or this range area, if you like, to the downside. How far? Probably to there-ish. So if I can find an entry up here that gets me down to here, happy days. I just need to see a reversal followed by a lower high. Maybe it's already there, but this is not a clear reversal for me. The double top is gone into a mess, hasn't it? What I'd like to see is a false break of resistance on a 4-hour chart. So up here, failed to take out this high, back underneath, maybe take out the lows, and then retest that area. Then I've got a definite trade to the short side. Same will be the case on the daily. All I need is a clear lower high, maybe at that line, around about 190, 115. So price down to here, find support, bounce back, give me a reversal bar, happy days, short. 3 amigos. That's what's driving this thought process on pound versus the Aussie. Lewis, you've got copy glasses on. Beautiful. Love it when you agree with me. That's all good. And that's kind of where I'm at, folks, at this point in time. A lot happening this week, of course, being the first week of the month. And if we can get him out, he's here. He's out of bed. He's had a big weekend. G'day, mate. How you doing?
How we going? I'm all right, mate. Yeah. As you say, big week, and it's the 4th of July celebrations tomorrow. So that's going to.
That's already played out. That one we mentioned on Thursday, where you just buy the S&P 500 the day before, and of course up she went. And guess what? It was also the 30th, which of course was a time by degrees, and just about every one of the indices did exactly as we thought it might.
They did, yeah, they did. Hi, Lewis. Lewis was with me yesterday as well. So he's mind you, he was probably on a more of a normal time zone. I was on midnight to 11, which was tiring. But I mean the indices, as you say, mate, they have stepped up. What I'm finding quite interesting now is what could happen next. This is the Nasdaq, and when I look at the Nasdaq broke through a pretty steep level here. There's the level. It's on this kind of steep channel, and it broke through this channel. And at this stage, it's still sort of bashing its head underneath the channel. But the fact that we've got this this new high here, from this resistance line suggests that we could be going up, but I'm not convinced. I've got to be honest, mate. I'm still thinking that we might well see some downside. The way that I'm sort of seeing these indices now is that we've had a huge run up, and if you look at the kind of longer term patterns on the daily, we've had this huge run to the upside. We've taken this area out. We've taken this area out. And we are kind of heading for what was the next level here. That looks like where we're trying to head. But this area, I say we were taking it out. This area is still in question. I still wonder whether we definitely will go up to that particular point. When you look at this on longer term time frames, like the weekly, the issue that this market has got is that it hasn't tested for a long time. It hasn't tested where it came from. And that really kind of puts a lot of stress. It puts a stress because of this area, but also there's an area below that it hasn't tested. It's just kind of exploded up and not come back at all. And it's the same on the monthly. You know, the monthly is even lower. Some of the areas on the monthly are even lower. These don't tend to get kind of unresolved. Eventually, that they tend to be resolved. There's even one down here. This was the COVID area here. But it got a little bit closer to the COVID area. So even like giving this, you know, it came within, what's that? Looks like around about 1,000 pips during that particular point. But this one hasn't even tried. It hasn't even tried to kind of come back and retest this area. So I'm looking for some downside. It could be to this point. It could be to this point, or it could be to this point. So there's a couple of targets I think that are probably screaming out for a retest of the area. We're also past the first year, and we had, you know, it's been the most astonishing start to the Nasdaq particularly, and much of it is because of the AI story. Now we know about AI being very new, and it means that regulators are probably going to come into play at some point. We also had the earnings season. We've got an earnings season which is about to start. We've also had a non-reaction, really. It's probably not the best way to put it, but we haven't really had a genuine reaction from all the tightening that's been going on. But these things are lagging. So when do we really start to see the result of what the Federal Reserve are doing? Yes, inflation has halved, so that aspect is played out, but the labour market has stayed very, very tight. And much of the reason the labour market has stayed tight is that the companies are anticipating a soft landing. So they're not willing to get rid of their workforce. So they're ready to go when things start to pick up again. Similar to COVID, you know, what happened during COVID was everybody was laid off, and then companies had to scramble to go and find people to come back again. And it caused a huge problem with supply. So companies aren't really that keen to do that. So it's almost like they're sitting on their workforce that they don't really need in this particular environment. And it hasn't pushed the labor market weakness into the picture, and hence it hasn't brought inflation down quite as fast, and it hasn't kind of caused this issue with the consumer. The consumer continues to spend, but the consumer in the United States is what drives the economy. And at some point you would think that if the price of food, even if it's going up by, okay, inflation's hard, but we're still sort of like, you know, near enough 5% inflation, 4 to 5% inflation, even if year on year inflation is at 4.5 to 5%, that is going to cripple people that don't have their wages kind of increasing at the same rate. And what are they going to do? They're going to stop buying games. They're going to stop buying anything that, you know, luxury items that they just don't need. They're going to focus on buying the staples, and that's the kind of thing that could drive things like the Nasdaq down again. Yes, the innovation will help, but how fast are companies really going to implement it? You know, much of this AI kind of surge has been about anticipation about what's going to happen in the future, but we're not really there yet. And as I say, you know, you've still got the regulators to potentially come into play, which they will have to, because AI, from what I gather, has incredibly dangerous consequences if they don't get a handle on how it's going to be utilized. Some of the tests that have been done suggest that we may be entering into a new revolution, like we've had with the Industrial Revolution, we had with the Internet Revolution. We may be heading into a new revolution, which if it's not genuinely put under control, could supersede human beings. And everybody knows that. It's not like that. This isn't kind of breaking news. Everybody knows that. And powers that be will understand that if they don't get a handle on it, then that I wouldn't even thought that the power that they have would benefit from having AI just out there and being able to develop at whatever pace it wants to. So I think the NASDAQ has probably got some further to come down, and I think that the AI story's probably got further to run. It may not be until later in the year, but as I say, now we've hit this second half of the year, we've really got a period between now and the end of September where things could change. You know, we saw such a surge. When do people decide, actually, let's just bank some of this profit? Probably relatively soon. When does the action from the tightening of finance really start to hurt companies? And I would have thought relatively soon, and we'll know that in the next couple of weeks when earnings season kicks off again. So these are the things that we're looking out for. There's no reason to sell the NASDAQ per se just yet. And I think it may well, as I say, it might have another little pop to the upside. Looks like it might have another, I don't know, 2 to 4% maybe pop to the upside. But I do think it might well be under stress between this area. This to me is a sell zone. I don't know if it's the lower end of it or the higher end of it, but this to me technically is a sell zone. And I think that there is also a case to be made to suggest that the data will probably end up matching that. And as I say, not sure whether it's now or whether it's later, but you know, summertime, not sure whether the cyclicals will do quite as well, you know, in this particular environment. So I wonder whether we might start to see some push to the downside within the coming weeks, and I think quite soon, but within the coming weeks. Same with the FTSE. You know, the FTSE is an index that is reliant on really global growth, and we're not seeing global growth. If you look at some of the Chinese data, America is a complete outlier. You know, it seems to have been protected so far. The Eurozone the same. You know, we're not seeing growth there. There is a genuine slowdown happening. So I see the same sort of thing with the FTSE. Could it grind around for a bit? Probably could, but I think that there is probably more headwinds out there that haven't yet played out, and we need to be quite aware of. That puts the Aussie at stress. That puts the Kiwi at stress. Might boost the dollar. It might weaken the dollar. It can go either way. The yen is still kind of, you know, down there under stress. The CAD seems to be kind of like picking up a few fans as well. So I think we probably need to allow the market just to like flesh itself out. I like the CAD versus the yen, incidentally, but the price of the currency is again in that kind of situation. You look on a monthly chart. This is you know a glaring sell zone. You know, it's very, very difficult. And I read it yesterday, actually, you know, saying to hop on with the current rally in the US is very difficult. I feel the same about things like the CAD yen. I like the CAD yen for further upside. Seasonally, it suggests it should do so. The yen continues to weaken because of the lack of policy action by the BOJ. The BOC and Canada tend to be doing, you know, seem to be doing quite well. But you've got to ask yourself, how much of that is already priced in? This would suggest quite a lot of it. You know, you look at these these bars, it would suggest quite a lot of it's priced in, making the trade even intraday makes it a bit more tricky. So
those two phases that preceded this, though, you could be excused for thinking that the next phase is underway, and they've both gone a very long way.
Yeah, they have.
The two preceding ones. So
they have.
I absolutely take your point that it's a sell area, but I think you'd be pretty brave to go either way right now.
Yeah, you can't sell it. There's no way you can sell it because the fundamental picture doesn't match that particular.
Philip's onto it. He's got a sell order.
Oh right, okay. I mean, to be honest, I did try on Monday, but if you're going to sell it, you're going to have to put some pretty good stops in place because you don't want this thing. This thing's gone so far. What's to say it can't go another distance of the same magnitude? And you know, so you've got to get your stops in place. You know, I took a very small trade because if this does come down, it's going to come down hard and fast. But that didn't play out. And now I'm looking at it and thinking, okay, well, I do want to sell this, but it's just not the right time, evidently. The one I think that is of interest to me is gold. I don't love the area, but I think that there's a potentially a case to be made. If you kind of look at gold on a line chart instead of a candle chart, then it does seem like we might well be at a bit of an area here. Might not be there actually. It might even be there. We seem to be on a bit of an area that could be something that could hold. And depending on what happens with the narrative of the state of play with the United States and the rest of the globe, there's a chance, I think, that gold does become this kind of safe haven currency again, and which we may well need. So I still think that gold is. I still think the story with gold is probably bullish, and we probably, everybody that was calling for 10,000, they didn't mean it was going to go to 10,000 within a few days or a few weeks. I still think the journey is on to the upside. There is a bit of a question whether it is here, but I do think we may well have a bit of a buy zone here as well with gold that may well play out. And if you look at really the last 2 months bars, it's attempted to create this evening star without any success, and this this is usually quite bullish. It's kind of this failed evening star. Of course, it could continue down, so you might be getting a tower top instead. But if this is a failed evening star, then that would suggest that we could well start pushing back to the upside with gold. It may well
in a
depend
buy
on
zone right now, in my book. Not that I'm keen to buy it, because I think it's still got a decent way to go south before it goes north.
Yeah,
but it's in a buy zone right now, in my opinion.
Yeah, tricky period anyway, mate. I think. Yeah, sorry.
Use the weekly chart.
Yeah.
Which pretty much is exactly the same as your line chart. If you put a trend line from the middle high, down through there,
Yeah, it looks all right, doesn't it?
Mm-hmm.
In truth, there it looks like that's the actual level there, because you got a touch here, and you got these kind of closing area. But look, I mean, and it has reacted there. That looks like the area that it's holding above.
It do,
and I wonder whether that's the channel, and if that's the case, that's going to suggest, certainly for my measurements anyway. There's the breakout point. That suggests 2,300 as a possible target on gold.
Yeah, look, I think the fourth leg or fourth attempt to break that level will be the one that does. But my God, go away. But I'm considering that the very level that we've just put on the chart, if that is broken to the downside, then I can see some nice selling coming in before the buy. So if I look at the first retracement off that first top, fairly deep.
Yeah.
Then the next retracement off the second top.
Oh, yeah. Sorry, here, yeah.
Yep. First one to the left, the high to the left.
Yeah.
Yep. Fairly deep retracement.
Yeah.
Next one, deeper retracement.
Yeah, I agree with that.
All about the same then.
It's about the same, mate, which is interesting, isn't it? Because then you're sort of like saying, well, that would lead us to around about 16. Yep. Well, if that was to happen the same way, leads us to down here.
So that's kind of what I'd be waiting for. But to get that tradable, I'd have to come underneath that trend line.
Yeah. Tricky environment, no question. There's a little trend line here as well.
And of course, as Phil says, they'll be trying to manipulate it anyway, inside and out. So what chance do we have?
Well, yeah, I mean, that's the issue with that is that it's right the way across the board. I mean, this is all kind of, even if you're looking at stocks, the way that the companies kind of try and manipulate their stock by buying back, even the buybacks, but that's pretty transparent. But even the buybacks, that sort of manipulates the stock price into taking some of the stocks off the market. So, driving the price, but not necessarily driving the value of the company. So there's all sorts of manipulation which goes on with this stuff, which makes it very difficult. But if you're trading it, I don't think it's quite as problematic. Investing in it, maybe. I don't know.
Yeah, indeed.
Big questions,
it's tricky.
George is in with us today anyway, mate.
I was going to say, speaking of manipulation, I wonder if he's been manipulating his way up Mount Kilimanjaro in the last fortnight while he hasn't been with us. Hello, George.
Jens, how you doing?
Hey, George.
On top of the world down under, mate, as always.
Excellent.
Except I'm copying a little bit of flack today over the over the Australian cricket side.
What's going on with that? They're playing they're playing the Poms, aren't they? What's going on with that?
Yeah, well, they beat the Poms again. So test the 2-0. It's the manner in which they beat them is the crucial point. Well, they played within the law, but not within the spirit of the game, as I see it. And that's what they're being accused of. So
what were they
doing?
Leave it there. Bit of sledging or what?
No, and no sandpaper on the ball. It was it was a matter of the wicketkeeper of Australia took out the wicketkeeper of England. When I say took out, he didn't smash him in the head or anything. He threw his stumps down after the wicketkeeper of England considered that he was safe. And as I say, in the spirit of the game, he probably was, but by the letter of the law, he wasn't. So he was given out, which has created a whole lot of angst amongst the Poms.
They need to get over themselves, mate. I mean, if they're good enough to win, little things like that shouldn't really matter.
Well, this is at Lord's, right, where the absolute future of the game and history of the game is so controlled, if you like.
Yeah.
3 of them, the members that stand up in their toffee jackets and clap everyone as they come on and off, and all the rest of it. The cricketers have got to walk through them and up into the lofty tower that Lord's is. Well, 3 of the members actually cajoled, and maybe even physically, I didn't actually see the incident. The Australian cricket team, as they walked through them. So 3 of Lord's members have actually been suspended. My goodness gracious me. That'd be total disgrace. They'd be Lords as well, probably. I don't know.
I love sport. I love sport for this because sport really does create some real emotions. I mean, why these emotions happen, it doesn't really matter, but it does create some real emotions.
There's no more emotions in any game than there is in football, right? And especially in England.
Yeah.
But, try Italy and France as well, man. It's just outrageous. The behaviour of some of those. But, yeah, great atmosphere. George, I'm sorry, mate. We've done everything but talk about your 2 weeks off. Where you been?
Well, it's been a, shall I call it a topsy-turvy moment. Yeah, it's a whole moment. This moment is carrying on for another for the rest of this month. Original plans were to be, what did you call it? Manipulating and pulling myself up Kilimanjaro with my son.
Yes.
around about now. But the young man is doing his psychology degree. He's finished his psychology degree, actually, at Portsmouth University. And he had 2 options. One of them was to go on an attachment for a year and then come back and graduate. And the other one was graduate and then, cheerio, go do something else. So his plan was to do the attachment, and everything kind of fitted into that. He finishes, his attachment starts in August, we climb the mountain, And then being a young, typical man, he kind of just called us and said, well, I'm not going to do the attachment. And we said, well, okay, oh, that's fine, son. So we can, oh, that's okay. And then my wife says, but hang on a second, what does that actually mean? Just take us through the logical steps, in terms of everything we've planned. And he's like casually saying, well, yeah, I'm not doing the attachment, so I'm gonna graduate now in July, and then I've been applying for a master's. Actually, I've just been accepted for my master's in psychology and fashion at London School of Arts. I think, and I'm saying, but hang on, this is the conversation. I said, I'm missing something here, son. Take us timeline. Lo and behold, smack bang, the graduation takes place when we're supposed to be up in the mountain.
Of course.
So Dad had to unscramble things at an interesting cost, and cancel all those trips, etc. And then you can imagine trying to get into the UK last minute for his graduation and stuff like that. So all of that is all been sorted out and done, but it's kind of put me into more of a listener to trading like now. Yeah. So, but anyway, so the good news is that in exactly a couple of weeks' time, we will be, I don't know, time convention. I think we'll be landing, or would have landed in London, trying to make our way down to Portsmouth. His graduation will be in
how long are you here for, George? Anywhere we can hook up?
So we landing on the 16th, I think, 310, 17th. And then we immediately, from Heathrow, we're going down to Portsmouth.
Yeah.
And we're going to be there, I think, 4 days. And then we come back to London for about another 4 or 5 days before we come back. So I can give you the final dates of that.
Yeah.
Where are you? I mean, I suppose you can get around to any place, right?
I'm in Brighton. Which is it depends how you're getting around. If you're driving, easy enough. Actually, you have to pass Brighton. You sort of could pass Brighton to go to Portsmouth. But Portsmouth is just a bit more west on the coastline than I am. So I'm right on the coast, east of Portsmouth.
Also, it'd be easier to meet you in Portsmouth than London, I presume.
No, actually, the line to Brighton's quite easy. London to Brighton's quite an easy, because I'm right directly under London.
Okay.
Yeah.
Okay. All right.
Yeah. I'll tell you what, mate. Let's see how you're fixed, and see if we can kind of get our things to match. But it'd be great to hook up.
Yeah.
Where do you know where you're staying in London?
Hold on a second. Is the something dockside?
Canary Wharf?
I think I've got
Isle of Dogs?
Doubletree.
West 3.
I think it's Doubletree dockside, some Doubletree hotel or something.
I can hear it. There's a trade coming. There's definitely a trade coming out of this.
All right, we'll chat. We'll chat off air, mate. We'll chat off air. Sorry. Getting distracted.
Goodness. Something by the dockside or something, but I'll check for you.
Yeah, that'd be amazing, mate. Yeah, we'll see if we can get together.
If that'd be fantastic. So, so with that in mind, I've been, not really up to speed with what's. I've been taking some trades, but I'd rather not be commenting on stuff now.
It's interesting, isn't it, mate? Sometimes, if you're not in the game, you're not in the game, and it's it's a bit like that with trading, isn't it? You are either in or out in some respects. And not to say that you won't dip your toe in, but it's not really something that you can continue at the same pace if you're not doing the research, in this quite as extensively and thoroughly as you would have done before. So I totally understand that. You may not be stepping out at the worst time in some respects. So you're going to be off during July, really.
Yeah, I mean, I've got a couple of weeks still here, but we're packing and planning things and stuff like
that.
And then really for those last 2 weeks, I'll be out of the game. And I come back with 2 days to go to end of the month, and that's probably not very wise to be doing much in that period. So yeah, a couple of
And
weeks.
we've got 2 weeks off as well, haven't we? When's that, Ash?
Well, I'm away on the 27th, I think. Yeah, the 27th. I go to Greece on the 27th. So I guess it's going to be from then.
I think it was for a week before and a week after. I can't remember. But
maybe.
We'll keep you posted on that, obviously.
Yeah.
We're having our biannual, I'll call it.
Yeah.
Fortnight off. Yeah, absolutely.
Biannual. Yeah. Yeah. We need a break, Jeff, don't we? Got to have a break.
Oh, my God, the stress is just killing me.
So we're not really looking at anything with the charts then too much, George. You haven't really got a huge opinion about direction or anything like that.
No, nothing really. But I mean, I had your comments on the indexes, and they're pretty fair. It's pretty spot on. So it's really a case of, I'm kind of just popping in if I see any reversals setting up, where we are with the bulls on the indexes, then I'll start taking interest. Are we going to go further up? We could. The market can keep going up. I think you mentioned it. Probably didn't use the term. Could still go for measured moves above levels we are presently.
Yeah.
So yeah, it's just been a little bit cautious, I guess.
Yeah, I think that's wise at these particular levels. I mean, it's just eminently more dangerous, I think, now to be a bull, even though that is probably the path of least resistance, and that's the kind of quandary. The path of least resistance is up, but we've gone so far so fast, it becomes a much more difficult task really to kind of hop in. So I think there's another push to the upside. Nothing yet that looks like it's going to drive it down, but I'm just waiting because we are at these sell zones. I think waiting for the catalyst to take us in the opposite direction seems to be logical to me. It seems like that we're going to get one. We're almost due one after this first half year where's the start of the year? I mean, this is the very, very first week. I mean, it was literally the low, pretty much. It was the third low of the whole run happened on the 1st of January. And ever since that point there, we've just gone from 10,000 up to 10,000 up to 15,000. Near enough, 10,000 near enough up 15,000 from the low to the high. It's just a crazy move. It's just an astonishing move, nearly sort of 40-50% to the upside in half a year. I look at that and I think that there's no way you're not going to get some genuine downside. With this 1 week, that's all we've had. 1 week in the last few. So it seems to be coming. Same with the Nikkei. I mean, the Nikkei, the moves it's still going up. This thing's even more amazing, really. The Nikkei is even more incredible. The way that this thing's moved. This is a monthly chart. 1, 2, 3, 4, 5 months of upside, but it's not so much just the move to the upside. It's the size of the move. It's been astonishing.
Speaks to me of these are not retail traders driving this market, and the 2 reasons I say that: the volume and size of the moves is one, but the other one that I think is probably more relevant is where's the cash coming from? Because all of the cash that was doled out, shall I say, during COVID has already been eaten up by the market. And now it seems it's going in the opposite direction at pace.
Yeah.
So I don't see that as being retail traders who are under stress, one would think. Well, not all retail traders, but the mum and dad investors who had probably more cash to spend during COVID haven't got that anymore.
It's an interesting
circumstances
point,
have changed.
Look, this is the volume. I mean, obviously this is broker volume, but it is actually pretty indicative. I've had a look at the volume of the actual kind of trading that's been going on. Now, these are daily volumes. Now, if you were to consider, actually, let's put it on a weekly. The weekly volume is actually pretty contained. You know,
yeah, that just blows me out of the water.
Yeah, I mean, look at this. This is from the start of 2022. You know, the volume has been pretty contained. And what's interesting here is that the volume is relatively contained as it's been rallying here. As this been going to the upside, this suggests that there is not as much participation as is available. You know, it seems like there could be more. As you say, that, you know, the institutes are probably involved in this, but not all of them. You know, they're not kind of stacking in heavy on this stuff. So I'm not sure whether we've actually managed to kind of hook everybody in yet, which is another reason why a leg lower is more likely. When do these guys start to take profit? I mean, they've had such a good run. When do they say, actually, it's not worth the gamble anymore? The free rate of cash is near 5%. Dividends need to beat that. Dividends at 2.5%, as attractive as they were a few years ago, are no longer attractive. So the dividend payments have to be now, you know, closer to 7.5% to be attractive, to beat the free rate. You've got things that eventually are going to permeate through the market, which probably haven't. So at what point do these guys say, actually, you know what, we've had a good run. It's half a year in. We've had a good run to the upside. Let's take something off the table. You know, I wonder whether we need to see something which actually does start to come back and do something more like this, where you've got this kind of like level across here. This looks like a dip. This looks like a potential dip, and I wonder whether we need to get something that does that, you know, at some point before we can have you know, absolute confidence that this is taking a genuine leg above these highs. I just don't know whether we've got enough fundamental reason to say that this is going to go beyond the previous highs.
Yeah, I'd agree.
It's just, it never really made sense, did it? Because the tech sector, this is the NASDAQ, the tech sector was always, with interest rates low, invest in the tech sector. And you saw these huge runs with the NASDAQ over a number of years with interest rates low. Now the interest rates are really high. Everybody's investing in the tech sector that, you know, that rely on cheap cash. A lot of these companies don't pay dividends, so the free money is in the treasury bills, and yet we're not really seeing the sort of, you know, there's a huge disparity, and it is a bit of a concern when you see this stuff, and it does suggest that when a move lower comes, it could be pretty sharp and could be pretty hard and could actually be a lot deeper than just creating a higher low here and go. It might well all just completely reverse. You've still got the question of the soft landing. Is it going to be a soft landing? I don't know. There still seems to be a lot of headwinds to my mind that this thing could reverse. However, in saying that, we're not looking at that today. What we're looking at is a market which continues to push the upside, and that's the direction of travel and the least path of least resistance. So we can't reverse it. But I am a bit concerned about the move in the indexes and particularly the NASDAQ actually.
Okay, so George, you got no trades. Ash, you got any trades?
No, mate, I am not
for the week. I mean, sorry, not trades, but positions that you need to be.
Yeah, you know, I quite like the dollar and I quite like the CAD. I don't particularly like the euro. So we've got an RBA rate decision, obviously due out. Is it tomorrow? So tomorrow, that puts that puts the Aussie a little bit at odds. But I quite like euro dollar short, and I quite like euro CAD short as well. In fact, I really like the euro CAD short. You know, this may well also be a left shoulder, head and right shoulder kind of forming. I'm not sure on that, but that's on a weekly. There's the dailies. These are the 4 hourly. This is the range that it's kind of stuck in. But yeah, I'm actually just waiting. I'll be quite happy to take a trade under these pivots on the euro CAD. I'd be sort of quite happy to see this come down, come back up again, and then see if I can get something here down to the downside again. And depending on where I can get my stops, that might be a take profit area, or that might be the take profit area. But I think that there's an intraday opportunity really on this one if it does what I need it to do. And what I need it to do really is give me a break and a retest. So maybe this bar here does end up breaking down, and then within a few bars it kind of breaks back up again. I'm not sure if I'd want it definitely above that monthly pivot, but if it was below the monthly pivot and it comes here or slightly above it, I think that would be of interest to me. But I need to see it take out these lows first. I wouldn't mind seeing it take out that monthly pivot, and then maybe do something like that, and then I'll be looking for downside.
And
Ash,
what were
euro?
Sorry, George.
Oh, sorry.
No, you go, man.
Go ahead. I was saying, Ash, can you put euro dollar daily?
Sure.
I'm glad we're on this because Lewis was, I think it was Lewis. Yep. Was talking about euro versus dollar. So let's have a look at it. I've got an opinion on it also.
Yeah, see, this to me also looks like downside. I mean, I don't know where the monthly pivot is. What's your thinking, George?
And what I'm thinking is possibly, or what I'm going to be looking for is a little bit more downside.
Yeah.
What I need to see is, if today ends up as a bear candle, and that bull candle there, that outside candle, if we can get, to the low of that or break the low of that, I think there'll be a little bit more down.
Yeah, I agree with you. And again, but my eye always goes straight to them. But I do see this this kind of going on, this head and shoulders. So I think there's also some reversal coming here as well, mate. And if that was to break down that area there, then there's a relatively good run, probably right the way back down to that point. I think that there's some evidence to suggest that if this does decide that it's not going up, that it could break lower and break lower quite significantly. There it is. Yeah, testing this area again. I think that's a possibility. But certainly here, I mean, you wouldn't even need that lower level if you can get into this intraday.
Yeah.
Similar though, isn't it, with a CAD? I don't like these pivots, but your point about breaking this area would be better, because at least it clears out that pivot as well, and then we can see if we can get some price action in here, which is really breaking down this point. That would be the real question as well. If it broke that, is there enough risk to reward? I mean, it's not a 2-to-1, but if you can get something in here, as this breaks down and maybe sort of like comes back up again, if we can get something in here and create a decent risk to reward, I think that this is a decent target down here. That's going to be 106,700. So I'm with you, mate. Euro dollar, I'm definitely on the short side, and Euro CAD I'm on the short side as well.
Okay, daily chart, please.
That's what I wanted to point out. Sorry, Jeff.
No, you're right, mate. Ash, copy your support trend line and take it up to the highs, please. Sorry, not that one. The bigger one.
Oh, the big one, yeah.
Yeah. Okay, so that's what I see.
Yeah.
The one thing I can't give you at the moment is a buy, but I think I can down at around about 107.85. So whilst I agree short term, there's potential for this to go to that level.
Mm-hmm.
I'm not convinced that we're not going to test the top of that channel, because we have come off the bottom 3 times. We've only been up to the top twice. So to me, that's the flavor, if you like, that we're in. I can see inverted head and shoulders sitting there as well. So the one thing that I can't come to terms with is that the dollar index is doing exactly the same thing, which means that there's a complete conflict of interest there as far as I'm concerned. Because if the dollar index does exactly what I'm suggesting it will do, then euro dollar goes short. for some, maybe, I don't know, maybe the bottom of that line. Maybe that's where we're headed. On the evidence of the dollar index doing exactly the same thing as the euro versus the dollar is doing, but potential upside doesn't make sense for me on euro dollar.
Yeah, well, the dollar index is very heavily weighted with the euro, so
of course, but that's what I mean. It's doing the same thing, so
yeah.
they both can't go in the same direction.
No, very true. So dollar index looks like upside.
Yes.
Yeah, and the euro you're looking at upside, but
yes. Yeah. So I'm wrong on one of them without doubt.
Yeah.
And I don't know which one yet, so I've got to wait until I get a signal.
I get it. Yeah, this looks like it might well come up to this sort of point, doesn't it?
Yep.
Yeah, I mean, I'll watch out for it, mate. You know, the big question really is: do people want to get involved in this before tomorrow, 4th of July? But there's going to be the holiday. I wonder whether we might need to get through tomorrow, and then just come back for it on Wednesday.
Yeah, look, Lewis is pointing out that head and shoulders that I think you've already mentioned on the daily chart, which is tight, and I really don't see a true neckline on that for mine.
On this?
Yeah, the current, what go back 2 highs. That's your head, right?
This one, yeah.
No, from the market, from where price is. In there.
Oh, yeah, in here. Oh, yeah, here.
Yeah. So if that's your head and you've got 2 shoulders, the one thing I don't see is a clear neckline.
Well, I mean, I don't think you could look at that on a daily chart. It's too tight for a daily head and shoulders. This is your left. This would be the head. No, I agree with you. I mean, if there wasn't this doesn't look like a head and shoulders to me. It's way too messy.
Are you talking about that one, Lewis, or the bigger picture?
The bigger picture one looks a lot more like it. This looks more like a head and shoulders to me, which does drive us down to this as a neckline.
Yeah, so I'm in no man's land. Not sure yet.
Yeah.
And I can see an argument for both.
The seasonal situation is that the dollar tends to have a pretty good week going into the first week of July. They'll start to level off a little bit next week, but yeah, the dollar and the CAD look okay. COT data as well. I think the COT data is suggesting that the buyers in the euro have really cut back positions. They haven't really they're not really doing a lot with the dollar, to be fair, but they look like that they have cut positions back quite a lot with the euro. Well, actually not significantly. So I'm just having a really look at it. They're not significantly, but the seasonal bias definitely for the euro is short in this particular week, and it's a pretty strong short as well. So seasonally, we do have a reason to say euro dollar short. The fundamentals are pretty solid, to be fair, for the United States, and not very good for Europe. But of course, a lot of these moves are driven by interest rates and not just the fundamental economic data. And the ECB they probably still have further to go. They probably still have further than the Fed to go. But the Fed, I think, are going to be first up for their rate decision, which is
Lewis is sorry, and I did point out at the beginning of the show that the S&P 500 buy into 4th of July has played out, in my humble opinion. So I think you had to buy it on Friday, Lewis, not today, because that market will be closed, of course, today. So I think you had to trade that on Friday, which is the seasonal thing, the day before July 4th, which actually happened to be the 30th of June. I think that's already happened.
It did play out. It'll be open today, mate. It's the 3rd, isn't it?
No. Oh, it is too. Okay.
So it's tomorrow. Tomorrow it'll be closed.
So why are they having the bank holiday today? Because it's a Monday.
Yes, but maybe so. I didn't know.
So they're having 4th of July and 3rd of July.
On Tuesday,
Interesting.
yeah.
Might have an early close, I think.
Am I wrong? Because I haven't got Forex Factory in front of me.
Yeah, there's no holiday today in the States, from what
Oh,
I gather.
I must have been looking at Tuesday. Okay, my apologies.
Yeah, that's okay. Yeah, so tomorrow's Independence Day, so nice day to have off, really, isn't it? A Tuesday, go back to work for a day, have a Tuesday off, 3 days then.
Yeah, how many people at work today?
Yes, exactly. Yeah. Oh, actually, yeah.
There'd be a few sickies, I reckon, hanging around. That's for sure.
Yeah, no doubt.
All right, I think we're going around in circles. Sorry, George, you got something?
No, I was just going to say, Ash, in terms of FTSE and US holidays, I mean, what's your experience or in terms of volumes?
Yeah, that's a good question.
The volumes really come out, which does kind of like mess the market up, but it does, the markets tend to. I mean, the FTSE's no different. They seem to tend to rally. They seem to want to rally into these holidays, and the reason for it is a little bit confusing, but they do seem to want to rally into it. So there's no reason to suggest the FTSE is going to do anything but stay where it is, or maybe have a little bit of upside today. Same with the Nasdaq, same with the S&P, but the volumes do just collapse. You just don't see, there won't be much trading volume today.
So yeah, probably just come back on Wednesday, right?
I think so. I think Wednesday is the most sensible day to really start this week.
Makes sense. I mean, I was just bouncing that and check, because I know, I mean, US volumes are big volumes in the market, right?
Yes.
So just to be a little bit cautious, if you're going to be executing trades. I mean, what I've tended to find is that, if you go in, because of the lack of volumes, from a fundamental perspective, you tend to get probably a lot more of these surprise candles.
Agreed.
During the day, which means, your stops are going to stay quite wide, right? Because it's almost like, anyone says something of little significance, because there's no volumes. It's like news announcement. There isn't a news announcement. So it might just be prudent to stay out, I guess.
Yeah, I think it is one of those sort of situations where, as long as you're in and out, I think you can probably put the stop in a normal place, and you probably take your money relatively fast. I think holding a position over this particular period, that would be a little bit trickier, and I would wait till Wednesday, with a longer term position. But I think the short term positions in and out, I think they're probably still okay, and you probably like to get a result pretty quickly.
Yeah. All right. Thanks. Sorry.
No worries.
Yeah.
Which did a wonderful thing for you the other day, that I can see now clearly, as we can in retrospect. Yeah. It's a beautiful little false break there. If you go to the low, pardon me, where is it? Can't see your chart too well. Maybe I can pick it up on mine. On 22nd of March.
Yeah.
That little red hammer.
Yeah.
Up one.
This one here?
Yep. So if you put your trend line from the bottom of that candle through the intermediate low there, look at that. Beautiful false break off the pivot.
Yeah. Yeah, true enough.
Good as gold. Yeah. Wives asking for holiday money, so take profit.
Yeah, yeah, exactly.
So that's new, Philip, is it? When did that become a new thing?
Yeah.
But yeah, good idea. Good idea. If you've got some profit, get it in the bank. Don't disagree with that at all. All right, we done, guys?
I think we're done. Thanks so much for coming in, George. Appreciate it. Good to see you again, buddy.
No problem. We'll and say hi next week and maybe have a few trades, and then we'll see if we can hook up, man.
Yeah, sounds good. Sounds good.
Beautiful. All right, folks. Thank you for your questions. Thanks for being our trade, or not so much questions today, but inputs. Really, really enjoy that. That makes for good looking and searching and hopefully trading at the end of the day. Have a great week, everyone. And thanks for being our trading buddies. We hope to see you on Thursday. Hooroo. Bye-bye for now. See ya.
Bye, guys.